Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing in the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Happy Friday, Austin. How are you doing?
Doing great, Andrew. How about you?
I'm well. Welcome to Stock Talk, everybody, where we like to talk about markets, give people some insight, talk about relevant market news and what's happening in in different sectors, especially ones we enjoy and like. And today we're taking a little bit of different spin because I guess in part we're sort of taking a shot at ourselves, but also we're also going to identify why we're different than some of the other, let's say, call them influencers or market education, YouTubers, TikTokers, whatever. And it's a great topic and discussion to have. And there's a great article out right now. It was on MSN and as well as Yahoo. And it goes without saying, it's a discussion that needs to be had. And maybe, Austin, you can kind of give us the rundown on it.
Yeah, so just a kind of general overlay is this idea of, influencers. And yeah, like you kind of said, we're going to be taking some shots at our own kind of network here a little bit. But giving dubious financial advice and getting rich doing so. So now, obviously, when we're talking about ourselves, we're not giving dubious financial advice, but no. We would fall under the classification of influencers technically because neither of us are financial advisors in the technical sense, and that's kind of the main point that the article's making. It's saying TikTok and YouTube passive income side hustles have been massively promoted by influencers that are mostly in these kind of situations have their own self-interest for why they'd be promoting something like this. It comes from a sense of, hey, I can help you make more money, and a lot of it is this kind of like reselling Amazon products and stuff like that, becoming a distributor through that sort of thing. But it breaks it down in a very interesting way, saying there's a lot of deceptive kind of side hustles on how you can get rich quick like this. You can make $10,000 a month. It's not that hard, and things like that. And it's becoming much more prevalent, obviously, as we move into the TikTok era. Recent studies finding that Gen Zs more so than any other generation have turned to non-financial advisors. About 34% of Gen Zs consume financial advice from TikTok or YouTube, while only about 24% of that age group actually consume that same advice from a financial advisor, which would be a big flip on its head from kind of your generation, Andrew.
Yeah, I mean, these are the same conversations that were in my generation as well, just in different sectors, different markets, and there's always been the get rich quick topics. So it's not a surprise that it's riddled with this, and it was mainly crypto, and it would be young Gen Zs on there saying, I made $1 million trading this or doing that or buying a crypto, or like you said, it's reselling Amazon products, and it's all these strategies, and most of them aren't selling a financial product or even a model or a trading system, although those exist too, plenty of them. Yeah. They're either just trying to build a base to resell products, but they're also being paid by different distributors to promote whatever they happen to be selling, and they sell the email list. There's a whole different streams of businesses that one can do when they're doing this. And so I'll give credit that some may not know really what they're doing, and some are clearly providing financial advice when they shouldn't. And I mean, it's easy to look into this because usually it goes something like this, and it always has, is I made $1 billion trading options and doing this, or I resold and did this and all that. or any pyramid scheme where it's I'm at the top of it and I've made all this money, and if you resell or if you follow my plan, you're going to make this money. Just buy my course. Now we have a course as well, and we are technically, as you said, influencers. But the difference being is that the length of time, and having worked at RBC and Merrill Lynch, there is that background that I have. Most of these other people have no background in economics, finance, haven't traded. Maybe some have. I mean, I get contacted all the time, like daily on messages about, hey, have you ever heard about options trading? Or, hey, have you ever heard about crypto? And I kind of laugh because a couple times I'll engage with them and I'll tell them, well, hey, I've worked at Merrill Lynch, and they'll go, I don't know what that is, but and I'll think, you're either just a bot. Yeah, that's interesting. You don't even know who that is. That's not a welcome, or that's a concerning sign to say the least. But then I flip the tables and I think, we send stuff out to people talking about markets and stocks, and I'm sure people look at that and go, oh my God, who's this guy? I don't want to listen to this guy. So I have I have mixed feelings because there is a lot of garbage out there. Always has been, always will. We make a distinction too. We never, ever provide any financial advice, and we constantly tell people to go seek advice. Because there's a whole portfolio, there's a whole strategy, and it isn't just regulations for regulation's sake. You really need to have someone sit down with you and walk through your risk tolerance. What really are your goals? Because with us, what we like is a small sliver. I mean, that's the stuff that we can relay, is some of the very basic portfolio stuff to get people interested to take the steps with a professional. And to do some of the research themselves, which is fine. But you don't, if you're providing specific financial advice to someone and you're never been qualified to do so, two, currently not licensed to do so, there's big problems. And you're allowed to get away with that in some of these more unregulated markets, or crypto, where it's getting regulated now, but it was just a free-for-all. And when everything's going up, granted, a lot of these people, especially the young kids, because I would have been the same, would think, I figured this thing out. I got a strategy. It works, until it doesn't. And now we're sitting in this world now where it's very different. And we were speaking a little bit earlier, is that you can still make money in these crappy, terrible, awful down markets. But maybe you can speak to that a little bit about some of the people that are making some money in this situation.
Well, you mentioned options trading, and people reaching out and saying, hey, have you heard about options trading, stuff like that? And that's a good segue, because the other part of this conversation that we wanted to have was, how can you make money in a down market? And what are some success stories? So of course, as I was kind of researching it and digging into it, simple Google search, how to make money during a down market. One of the first things that came up was trading options. Like, oh, you can trade options, you can short sell, you can dealing short ETFs, you can use trading currencies as a way to do it, which are all really viable ideas if you have the time and the energy and the knowledge to be able to sit there and do that. Because trading options isn't something where you could just sort of plug and play, like pick a couple and sit on, and check back in a week, be like, oh, did it work? It requires a bit more focus.
Yes, I can promise you, you do not want to get into a derivatives market. I mean, no. I don't mean that to dissuade anyone. Let me just put it this way. I had a derivatives license at Merrill, did futures and options. It is extremely mathematically heavy, extremely difficult, and there's a lot of modeling. So that being said, it's great if you have a broker and you just do the basics. Hey, can we cover a position? This is where options are great. You can cover a position. You can short a stock, which if you look at now, whenever everyone kind of saw that, okay, things are looking bad in the market, plenty of people sold a lot of stock short and made money. And touching on, say, even with the futures with currencies, even if you had not had any interest in getting into that market, which is it's massive leverage, which is either fun or massively destructive, depending on how you want to look at it. Your best bet if you had a strong opinion, up to date would have been to sell all of your equity and just sit in US dollar.
Yep.
You would be up 10% for the year. And that's just
which is a lot better than most people could say.
Which even us, we're down quite a bit. Now, we always tell people we don't trade. And I would never be in any position that I'd want to even do that trade. It's not my style. It's not my mindset. It's not how we work as a model. We have to endure this pain right now. It was great being excited every day as stocks went up and there was lots of news on it last year. And this is a time where it's more painful. But we don't deviate at all from our model. I don't deviate because, hey, if we had done this, we could do this, we could do that. It's not what we do here. And that's why the distinction of we're actively wanting to be influencers to get people excited about markets and to get them excited about, especially if we're going to do this energy change, what does that mean, and to help educate. But we never want to do these kind of TikTok things or these types of things where you're trying to get people to do things that you're just not qualified to do. I mean, they're going to get caught up at some point. At some point, that those chickens will come home to roost. But we see it in every generation. It's just very out in your face right now because we've never been able to have this type of connection with people, this type of saturation of people being able to get a message out.
Yeah, you're absolutely right. There's a lot of factors that contribute to it, and it emphasizes the need, I think, for people to develop their own, their own model and their own philosophy on how they're going to move forward, and not just be counting on anyone, you or me, or some guy on TikTok or your neighbor Joe who made a bunch of money trading some random stock. You got to be able to do your own research, and that's something that we always preach and harp on. And I think kind of the last thing that we'll touch on in this conversation here is I pulled together just a quick list of some prolific investors who made a lot of money during down markets. And a lot of the usual suspects names are on the list. Warren Buffett's on here, Jamie Dimon's on here, John Paulson. So there's a lot of guys who I kind of looked, okay, well, there's a connection here obviously, is these guys have a lot of money, so they were able to take advantage of obviously with Warren Buffett getting involved in General Electric and Goldman Sachs when he did, and those positions obviously massively increasing post 2008. But with all those kind of investors, they have the connections to utilize the amount of money that they have. They have the knowledge and the wherewithal to be able to apply it correctly. But that doesn't mean that the philosophy of finding massively undervalued companies during an economic downturn can't be applied to the little guy as well, was kind of the take that I had off of that. So you can see, we talk about a lot of companies all the time right now that are massively undervalued. I mean, Progressive Planet is one that we've been talking about recently that very just on the very basic, without the blue sky potential of that company, I believe that company is sitting very undervalued right now. I think Atlas Salt, from where it was at, is massively undervalued right now. So there's opportunities out there for people to look at and say, Desert Mountain Energy is another one that I'm sure people are sick and tired of us talking about at this point. Yeah. But it's another one that is, massively undervalued for what the actual portfolio of that company looks like, what their actual package is. So there's tons of opportunities if you just tool them in the right directions. But you can also find, hey, I've got a chance here to, buy low on a really good company that is going to come out of, whether you want to call this a recession. I know we're not technically supposed to call this a recession because they're changing the definition of it. But what you call it a recession or not, it's what you come out of this economic period and into a better one, strongly positioned for massive growth.
Yes, and we have our quarterly report coming out here, which will touch on a lot of these things as well as the overall economy. And just one last thing, when we're talking about, say, Warren Buffett, his strategy works so well. And someone like that, or Druckenmiller, or you'll hear this often, they'll say, I make all my money in down markets. And you think, well, what are they doing then? Now, I'm not going to give any specific details, but someone like Warren Buffett, they have different assets. Now, they love insurance companies, things like this, because that's a constant cash flow. That constant cash flow is required to run their business, which is all these assets of companies. But when things go down, they still have a cash flow running in. Like if you own like a lot of mining companies or oil and gas companies, they are absolutely cash rich. So whenever another sector that you have, say it's Johnson & Johnson or some other sector that's down low, you can take that cash flow and just buy those cheaper ones that you say, listen, I've owned this for 10 years. I'm going to keep building my position. It's exciting when that comes down because now he's built it to such a large extent that he's got so much free cash flow that if things pull back, he knows that he wants more of it. So it's great. For the average person, their only other income, generally speaking, is going to be the income that they make from working. So they may not have that luxury, but if they're working with an advisor, often they're telling them to monthly put in money monthly, and there's a reason for that too. So you're not just going all in all of a sudden. You kind of mitigate some of that volatility and fluctuation of price. But that's kind of the general gist of it, and we'd love to have further conversations with people just about some of those ideas that other huge funds and people have done. But I thought it was an important conversation because it's just like when you talk about what do you call it, pump and dumps or these types of things or lifestyle companies. You have to have that conversation because it not only gives us a bit of credibility and legitimacy to acknowledge that that's out there, but to warn people that that's out there. There's a lot of this out there that's just, it's fun media, it's interesting, it's wacky, but doesn't mean you should act on it. And generally speaking, if something is way too good to be true, generally speaking, it's going to be. And these are, like you said, targeted mostly to young people who they're desperate to see another way to work. And that there's good and bad in that. Is that hopefully it'll cause some thought process that they can figure out a new way to make a living. But at the same time, it's also taking advantage of people, spending money on stuff that may not help them at all.
Yeah, and then taking advantage of people who don't have a background or an understanding in that kind of field and are just taking what you're saying verbatim. And I'm not, we're kind of painting with a very broad brush here. I'm sure there's plenty of TikTok influencers and YouTube guys that have great intentions and want to, build a community where they're building mass portfolio. And that's great. But what we're talking about is the very obvious scammy kind of punchy ones that you have to look out for. So I think that's a great way to kind of wrap this up. I'll finish off my bit here by saying, share this video, like and subscribe to our content. If you know someone who's, who has fallen for maybe one of these TikToks, share this video to them. Reach out and tell us the stories about it. We'd love to hear about, what kind of different things people have experienced. Or, hey, if you're a TikTok promoter or someone who doesn't like what we're saying, who disagrees with us, reach out. We'd love to chat to you as well. We'd love to engage on that kind of front. So it's just about having that conversation and realizing, okay, what is a legitimate opportunity and what is a bit of a scam, and you have to kind of have your thinking cap on. You have to be a creative thinker to be able to apply that, but it becomes very reasonable to quick to understand and see once you really start thinking critically about it.
And especially during challenging times, because desperation starts to sink in, and that's the worst time to make any decisions at all. Never make decisions. That's why we always say have a model, stick to it. You can learn from it. There's step-by-step processes. So thanks for sharing that, Austin. I thought it was a great conversation we need to have. And also, we love the engagement that we get. Send us messages, send us texts, reach out. And if there's a topic that you guys are really curious about, let us know. Maybe we'll cover it.
Absolutely. Well, everyone take care. Have a great weekend. We'll be chatting to you next week. Andrew, have a good one. Everyone, have a good one. Take care, guys.
All the best. Take care.